Hey traders, this is Blake Morrow with ForexAnalytix, and I know you just heard about the Supercharge webinar, but if you guys haven't registered, get over there, click the link below, make sure you register for that. Also, if you haven't tried out ForexAnalytix, well, right now is the best time to do it for you to try it out, because if you missed the special pricing that was this last month, you now have the opportunity to it's $1 for 10 days. Once you log in, make sure you look at all the different tools that are available, like Data Flash here, the live squawk feed, the news flow that doesn't go out to anything else but here. Well, it does go out to Twitter, but some things we can't even put on Twitter. It just comes to here. The risk management tools, all the analysis that you get, all the different charts. Check it all out, and then download the mobile app. Download the mobile app, and then also go to the chat room. We probably have one of the most active communities in any trading community out there. It's probably one of the most active. That's just the general chat room. We've got, several other chat rooms to check out too. But let's talk about this last week, and let's talk about this week in the markets. And, I'm going to be going through the live charts here in just a second. The reason why is because, a lot of the basic technical analysis is being updated over the weekend. And just for your common knowledge, I do the basic technical analysis on all these instruments, all 30 instruments that we cover every evening. And during the day, I do a lot of the updates. Amanda does, Paul Franco, Steve Vulgatis. There's a lot of people that do different updates throughout the course of the day. But all the intraday updates, all the end of day updates, are usually by me. Like this one was, when Bitcoin was breaking through 38,500 as it was rallying. So, that was updated by me. Okay. And then also the end of day analysis, that type of thing. Okay. I just want to let you guys all know that. Again, that's just more common knowledge than anything. So let's talk about, first of all, I guess let's go back and talk about last week. So last week, the analysis of buying the euro dollar was spot on. As you know, we went straight up in the euro all week. And what really transpired is a ridiculous weekly candle. And I mean, we were talking about being long the euro dollar. And I'm going to stop for a second and say, I hope you guys really enjoy the week ahead videos. I mean, last week I was like, stocks are going to rally, euro's going to rally. You can go back to last week and listen. This is free analysis that we do every week for you. Myself, I film it. The team edits and puts it out on social media and whatnot. If you like what we do, subscribe to the channel, please, and then also please give us a thumbs up. The team appreciates it. I appreciate it too. So going back to last week, if you go back to the video, it was 111.50. I'm like, yeah, the euro is at major support, just like that. And I'm like, got to play it long. And I hope you guys did. And I hope you guys crushed it last week, because that was, for a lot of people, I'm sure it made your month. All right. And for me, it was there. Okay. But now the question is, what do you do? And let me just say that we have a piercing line formation. The piercing line formation is, black candles followed by one big white candle, or, bullish candle. We call it black and white because that's pre-colors. You used to have black and white paper. So, black candles down candle, white candles up candle, that type of thing. But, obviously our colors are a little different here. It's just more of habit, right? The question is, what do you do here? And I think the determination of, whether the euro is going to break out above 115 or not is really the inflation data that comes out about midweek this week. So this next week, we have CPI, or actually on Thursday, here in the U.S. And I would think that, we're going to be now supported on down to 1375, and resistance is at, 115. there is a chance that we break through 115 just to squeeze people. And if that happens, theoretically, what we're looking at is you're looking at a move possibly to 115.85 just on a squeeze, just squeezing. And then, you pepper in some weak CPI data, and by the end of next week, we could be trading, at 117. That is a realistic expectation. I don't, you guys have heard me this. Those of you that have listened to me for, 5, 10, 15 years, and you've heard me say this often, big white candles are followed by other big white candles, or big black candles are followed by other big black candles, typically speaking. You don't just get one and, one and done, typically, right? So this big white candle on a weekly basis looks like, to me, we can produce another one like that, or, something like that, right? When it comes out of nowhere, catches everybody short, people get John G'd, and, next thing you know, there you go, right? It's something that everybody has to pay attention to. And the reason why I say that is because I don't have any euro dollar exposure right now. But what that does tell me is I need to buy dips. Okay? I hope that makes sense to you. I hope that just simple analysis makes sense to you. All right, now let's also talk about the S&P. The S&P, as we talked about last week, go back to last week's video, we were talking about this triangle, and I said the risk is that we break higher and we stall at the 618. Well, we did. We rallied, hit the 618, and reversed. Hopefully you guys made some money on the short side when it hit the 618 retracement. I know I was selling risk up there, did pretty well with that, until last week. Now the question is, what do we do here? And I think it's pretty simple. It is now, you're above 4450 or above, or let me just put it this way, you're boxed in between 4450 and 4600. And so you really have to say, okay, if you get above 4600, you're going higher. You get back below 4450, you're going to revisit those lows. What do you do right now? This week is not easy, guys. Last week was a layup, right? This week is more of a, shoot, I don't know. It's going to be a little tricky, and it's going to be volatile, and there's probably going to be a little two-way price action. The great news about that is we're traders. So as traders, we're going to be able to finagle a little bit of, maybe some poor entries. You get some, because you'll get two-way price action, give you a little bit more opportunity to get out if you know you're wrong, that type of thing. That's what I like about being in a trading market, is that, I'm not always the best timer. And the reason why is because I'm doing webinars, I'm in chat rooms, I'm trading, then I have a sick kid for 3 days like this last week. And so I have to deal with that. And I'm running over to the store to go grab medicine, so there's life gets in the way. And so sometimes I want to get into a trade. I get into a trade and then I don't manage it as well as I wanted to, or I mistime my entry. And next thing you know, I have to kind of wiggle myself out of a trade. It's easier to do when you're in a two-way market. And that's what we're dealing with. We're in a two-way market. So just, key into your levels, trade your levels, whatever those levels may be. Then I'm, trying to map some out for you, and then go from there, right? That's and especially when we have a week when we don't have a lot of data to really deal with. We have some, inflation data from New Zealand. We got some inflation data from the U.S. Those are going to be, probably the bigger ones. We have, UK GDP on Friday. But in all actuality, it's like, this is a week where I think we're going to be doing a little bit of weave and bobbing and not so much, directional. But I could be wrong. I'm wrong, just as often as I'm right, it seems like. But it's, the question is, do you, close out your downside before it gets away from you and you let your winners run? That's what trading is, right? So let's talk about the dollar index. So the dollar index is slumped. We're back into what I would call, we're back into neutral territory in the dollar. Now here's where the dollar turns bearish. So this is why you kind of have to pay really close attention to where the euro's at, because if the dollar index breaks this ascending trend line, and look, I've been a dollar bull. All last year I was a dollar bull for the most part. Tried to play it to the upside. Of course, I trade both sides, but I try to be more biased being long the dollar. Right now, I'm not so sure about all that. My colleagues at ForexAnalytix, like Steve and Stelios and K-Man and Ryan, they've all really been calling this since January. Their bigger trade of their bigger idea was to be long euros. Why? Because that the divergence between the two central banks were going to converge. You would get ECB rate expectations starting to move up, and then the possibly FOMC expectations were too high, and they might come back. Well, I'm not in the camp that the Fed is ready to reverse course, but I am worried with inflationary data that we see. If inflationary data starts to weaken, that will disincentivize the FOMC from raising rates too aggressively or being too tight with monetary policy. And at that point in time, that's why you might see this dollar index break down. And so the point I want to make here is if the euro breaks above 115, that means the dollar index is probably breaking below 95. And if we break through 95, we go to test 94.50. And then you guys know if we break 94.50, it's all over. But the crying for the dollar. I mean, the dollar is gonna do the exact opposite. I know we've talked about this. It's gonna do the exact opposite as it did in 2021, where at the end of 2020 everybody was a dollar bear. End of 2021, a few months ago, the dollar was at all-time highs. At new highs for like the last year and a half, and now you've got everybody thinking in 2022 the dollar is going to be bullish, and is there a good chance that everybody gets wrong-sided going into 2022? There is a good chance, right? It happened at the end of 2020 and into 2021. Could very easily happen the other direction now. So. No, we just have to be watching. Like I said, inflationary data I think is going to be really important. We saw a strong jobs report. The dollar, bounced a little bit. I guess you could say. I guess you could call that bouncing a little bit. But in all actuality, I mean, if you look at the dollar index, let's just do a little bit of technical work here. You take this high to low, and you go, shoot, man. The 38% retracement comes in around 96. So any rally to 96, we're probably going to find sellers now. If you're talking about the dollar index, you'd say, okay, well any rally up there is going to find sellers. So that might be the euro dollar pulls back to 114, maybe 113.80, something like that, and then we're going to find some sellers. And then the flip side of that is if we break through this 95 level, which would be the 115 level in the euro, there's a good chance that we're going to slump and test this support because we're breaking a trend line. Next thing you know, we're at the 38%, maybe 50% retracement of this entire move, going into summertime, over the next couple of months. So it's going to be a pretty tricky time. And I think this is going to be a week. Like I said, it's going to be a week where there's two-way price action. There's, and two-way price action, I will reiterate, is good for us traders. Now, one other thing I should note. Let's go over to, because we talked about the stock market, we talked about the dollar, we talked about the euro. I do want to talk about cryptocurrencies. The thing about cryptocurrencies is they are recovering, and I want to show you something that with Bitcoin, once it cleared that 40,000 level, like I showed you on ForexAnalytix, the last update you got with Bitcoin was right here. Because this is Friday, right? It broke 38,500, and the arrow is pointing higher, saying, "Hey, we're going to be, 40K. If 40K is broke, it's gonna bring up risk, meaning stocks are going to move higher." And Bitcoin flew through 40,000, and we're trading around 42. And look at Ethereum. Okay, Ethereum. This is a kind of an important chart if you trade cryptos, right? Which I do a little bit. I think they're great trading vehicles. But check this out. So you got Ethereum with this big channel, and now we took out that this was a 2,800 was a big resistance, right? It's like, you know, everybody's kind of looking at that number. Once we cleared 2,800, I mean, look, we're at 3,000. You know, I look at Ethereum, and to me, you know, Ethereum looks like we're going back to at least the 38% retracement, if not higher. So the 38% retracement comes in at 3,200. You know, the 50% retracement is 4,500. So if you start thinking in those terms, like, okay, I see the bullishness of Ethereum, I see the bullishness of Bitcoin. Well, if those two cryptocurrencies are bullish, that means that risk is going to be supported pretty much too. So the better way to explain that is any dip in the S&P is probably going to be supported for now. You know, it's probably going to be supported for now, and you know, whenever Bitcoin and Ethereum stall for you know, for find some resistance, then you might start to look for a turn in the S&P. I know I've said this a lot over the last year, but cryptocurrencies are the most high beta bullish, high beta, you know, kind of investments. So what that means is if they're going higher, that's probably a good indication that people are willing to take on risk, meaning stocks are going to go higher. But if they are coming down, you know, stocks are probably coming down too. And you've seen this big slide in the S&P, and we had an equivalent slide, you know, and you know, looking at the Bitcoin, we've had an equivalent slide, you know, since the end of the year, since November of last year, and then the S&P finally took notice too. But you'll notice how, you know, we are starting to see a turn, you know, higher as the S&P is now finding some lows and now stabilizing. So I hope that all makes sense to you guys. And remember, we talk about all these things and all these ideas and more every single trading day on the F.A.C.E webinar, and it is free. So the link to get to that free F.A.C.E webinar is down below in the description. Once again, if you're watching us on YouTube, you're watching this on YouTube, please give us a thumbs up, subscribe to the channel. It's free to do so. And this way you don't miss any of our content that we put out throughout the course of the week. Come take a trial of ForexAnalytix. It's $1 for 10 days, a premium service. You get our premium version of ForexAnalytix for 10 days for $1. Try it out, see if you like it. Come see me in the chat room. I'd love to chat with you. You guys and gals have a great remainder of your weekend. Enjoy it, and I'll see you Monday morning on the F.A.C.E webinar. Have a great one. My name is Blake. I'll talk to you soon. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.